Good morning. I'm Jane Morgan, and today I'm joined by Simon Francis from Orior Capital in Hong Kong. Good morning, Simon.
Good morning, Jane.
Now, Simon, just before we talk about ABR and your report, can you tell me about yourself and Orior Capital?
Yes, sure. So I've been a resources analyst in Asia for about 25 years, during which time I headed up research at some of the major banks. There's a few grey hairs, as you can probably tell. I founded Orior Capital 2 years ago. Orior Capital looks to identify and take advantage of undervalued opportunities in the resources sector.
And look now to the ABR report.
Well, the report on ABR addresses two things. It looks at the increase in planned sulfate of potassium, that's SOP capacity, that was first outlined in the enhanced DFS from April this year. And that's important because at planned capacity, ABR will become the largest SOP producer in North America and also the lowest cost producer globally. So that's a transformational change in the company's competitive position compared to earlier studies, and that's something I think the market hasn't really fully appreciated yet. And also, now that the project is fully approved and expected on stream about a year from now, the report looks at earnings and valuations as well.
Well, just on that, so can you give us a little bit more information on how you valued the company?
Yes, so I split the future, if you like, into three timeframes. There's a pre-production period, essentially the next 12 months, where we value the company on a percentage of net present value. And then as the company ramps up, there's a period of very rapid growth from 2021 to 2026, where we value the company on 14 times EV/EBITDA. Remember that during this period, EBITDA growth will be about 90% per annum. So it's actually going to be one of the fastest growing industrial minerals and fertilizer companies globally. And then finally, as the company reaches full production, we used 10 times EV/EBITDA, which is probably conservative because the sector is trading at about 12 times now.
So, Simon, you have a 4-year target price of $9.29 per share. I mean, that's about 10 times the current share price. Is that optimistic?
I think it's easy to look at that and make that assumption, but I would say no, absolutely not at all. You have to remember that valuations are based on the DFS, and I think the DFS looks somewhat conservative in that management very sensibly want to under-promise and over-deliver. There are a number of factors actually that could drive higher earnings and higher valuations. One example of that would be the boric acid head grade recovery. That's the grade of boric acid coming out of the well. The DFS is based on a grade that was actually achieved by a previous owner of the project way back in 1986 in a pilot plant operation and without using heat. So applying heat to the injection fluid, ABR ought to be able to achieve a higher boric acid concentration. And if they can do that, they would need to pump and treat less water, and that would mean fewer wells and also a smaller solvent extraction plant. So there's definitely opportunities, I think, to lower the capex and to also lower operating costs. Another factor might be in the SOP pricing. The DFS doesn't address the potential, for instance, to sell higher grade SOP products. Mineral enriched fertilizer products, mosaics, Aspire is a good example of this. This is a boron enriched potash sold for very high prices. ABR is already undertaking crop trials on a boron enriched SOP, so it's likely that as that gets developed, some portion of its fertilizer products will be sold at much higher prices than are assumed in the DFS. It's also worth pointing out, I think, that ABR has a big cost advantage in making these mineral enriched products because it will produce both the SOP and the boron on site at Fort Cady. So a third thing might be that in the DFS, each phase of the project is assumed to come on stream 2 years after the previous phase. So there's plenty of scope for that schedule to be accelerated, and that would bring forward earnings as well. So yeah, I think you can look at the target price and think 10 times that's a bit outlandish, but I would say that there are a number of project specific factors that are not incorporated into the feasibility study that could actually drive valuations higher than I've assumed. Look, I think the bottom line on this is that as the project ramps up, as the company assumes its position as the lowest cost producer globally of SOP, and as it begins to develop branded fertilizer products, ABR's valuation will be transformed, and simply the market hasn't recognized this yet.
Well, Simon, thanks for your time today, and we're looking forward to receiving some further updates and your thoughts on ABR.
Thanks, Jane.